Joining us live with more analysis is KPMG Chief Economist Dr. Rynne. Brendan, thanks for your time. Firstly, let's look at the broader picture here. What sort of response have we seen on the world markets? Are we still seeing a lot of red on the board?
Yeah, I think we are, and it's not surprising, really. I mean, what we're expecting to see as a consequence of these tariffs is a slowdown in global activity as consumers in the US really now face significantly higher import prices. That's going to slow down their aggregate demand, and we will see a slowdown in US economic activity, at least in the short term, while this sort of works its way through. From an Australian perspective, we're anticipating our growth to come off a little bit, still be positive this year, but just sort of be shaved in terms of growth activity of around maybe 0.3, 0.4% compared to what we otherwise would have anticipated. And what that means is a lower GDP after a period of time of about 1% compared to where we otherwise would be. Now, I understand the last time I looked at the market, it's down by around about 1% as well, which sort of makes sense to me in terms of investors expecting some sort of fall away in corporate earnings as a consequence of this.
And what's your analysis of how this will impact our Asian neighbours and key trading partners and the flow-on impacts we could see from that?
Yeah, unfortunately, I'm still running through it at the moment. One of the things that's quite complicated in all of this is that the tariffs are pretty much bespoke to each individual country. In the modelling that I do, I basically have to shock each individual country, and it takes around 3.5 hours for the model to run to reach an outcome. The last time I did this in preparation for today, I was using basically a weighted average tariff increase of around 18%. Now, from today's numbers, I think it'll be slightly higher than that, in particular with the additional 34% tariff going on to Chinese imports into the US, as opposed to what was previously announced of only 20%. So that those imports are now looking at a 54% tariff going into the US from China. So that will cause quite a large ruction in global trade, certainly a churning in activity globally. And while previously I'd anticipated global growth to fall by around 0.4%, based on those previous estimates, I fully expect now that to be a bit conservative, and it will be a bit higher from that.
And Brendan, could this backfire on the US? We've seen Australia saying we're not going to put retaliatory tariffs onto America, but some countries might take a different stance, and the domestic situation in the US seems pretty unclear as well in terms of the consequences there.
Well, I think even in the absence of retaliatory tariffs, the consequence of this is likely to be a slowdown in US consumption activity. And despite what the president said this morning about additional investments, I do think that there will be greater uncertainty around incremental investment activity happening within the US as a consequence of all of these tariffs. What that will mean is that the US economy will be slower compared to the scenario of no tariffs being implemented. So even in the absence of any reciprocal tariffs put on that then further impacts US exports into other markets, the likelihood is that we will see higher inflation, certainly for consumer goods in the US, and a slowdown in purchasing by the households in the US, just as a mere fact that in essence, we're likely to see something like an additional 20% put on the price of imports going into the US.
Dr. Brendan Rynne, always appreciate you making the time and sharing your analysis with us. Thank you.
Thank you very much for having me, Ash.